The global financial order just shook, and the tremor started in New Delhi. In a move no one saw coming, India has taken a bold step away from the US dollar in its trade with China, opting instead for direct transactions in Yuan. For decades, the dollar has been the ultimate power tool in Washington's arsenal, the currency that underpinned world trade and gave the US unmatched influence over global markets. But now, one of the world's fastest-growing economies, and a key US unmatched influence over global markets, partner, has decided to break that tradition. The implications are huge. This isn't just a currency swap. It's a geopolitical signal that could ripple across continents, weaken America's grip, and give Beijing a major victory in the currency wars. For nearly 8 decades, the US dollar has reigned supreme as the world's primary reserve currency. Its dominance was cemented after World War II, when the Bretton Woods Agreement tied global trade to the dollar, backed by America's unmatched gold reserves. Even after the gold standard was abandoned in the 1970s, the dollar's role only grew, becoming the default currency for oil sales, international loans, and cross-border trade. This dominance gave Washington extraordinary leverage. Nations holding vast reserves of US dollars were tied, financially and politically, to America's economic fortunes. The Federal Reserve's interest rate decisions could ripple through the economies of Asia, Africa, and Europe within hours. For decades, major economies, including India, conducted most of their international transactions in dollars, not just for convenience, but because it was seen as the safest, most stable option. The dollar's stability created a financial ecosystem where US debt was considered risk-free, and American sanctions could bring entire economies to a standstill. But times are changing. Rising geopolitical tensions, trade disputes, and alternative payment systems are challenging this long-standing order. India's decision to pivot toward the yuan is more than a simple trade arrangement. It's a sign that the dollar's unchallenged supremacy may no longer be guaranteed. India's decision to bypass the US dollar in trade with China didn't happen in a vacuum. Rising tensions in Washington-Beijing relations have put countries like India in a delicate position. While New Delhi maintains strategic ties with the US, its trade with China remains massive, and settling those transactions in dollars made them vulnerable to currency fluctuations, US monetary policy, and potentially sanctions. The yuan offered an alternative. Beijing has been actively promoting its currency for cross-border payments, offering favorable exchange arrangements and lower transaction costs. For India, the timing was right. Global oil prices, rising import costs, and a weakening rupee had already made dollar settlements more expensive. By shifting to yuan transactions, India reduced its exposure to dollar volatility, while sending a message that it won't be caught in the middle of a US-China economic crossfire. Behind the scenes, Indian officials also see strategic value in diversifying currency reserves. By holding and using more yuan, India positions itself to tap into Chinese markets with greater ease. The move also signals a willingness to participate in an evolving multipolar financial system, one in which the dollar's dominance is no longer the only game in town. China has spent years quietly laying the groundwork for a moment like this. Through its Belt and Road Initiative, regional trade pacts, and financial partnerships, Beijing has been promoting the yuan as a viable alternative to the US dollar. The goal is clear: reduce dependence on Western financial systems, and create a network of trade that runs on China's terms. In recent years, China has signed currency swap agreements with dozens of countries, allowing them to settle trade directly in yuan without converting to dollars. These deals make transactions faster, cheaper, and less vulnerable to US sanctions. India's participation adds significant weight to this strategy. By accepting yuan payments from a major economy like India, China not only boosts demand for its currency, but also enhances its credibility as a global reserve option. This fits perfectly into Beijing's broader ambition to position the yuan alongside or even above the dollar in international trade. For China, the India deal isn't just about economics. It's about shaping the global financial architecture to suit its long-term strategic interests. Every new partner that uses the yuan chips away at the dollar's monopoly and signals that the balance of power in global finance is slowly tilting east. In Washington, India's currency switch landed like a thunderclap. For US policymakers, the move represents more than a trade preference. It's a symbolic challenge to the financial order America has led for decades. While official statements from the Treasury Department were measured, behind closed doors, the concern was palpable. For years, US administrations have relied on the dollar's dominance to enforce sanctions, influence global trade policy, and maintain economic leverage over both allies and rivals. India's pivot to the yuan, especially given its status as a strategic partner in the Indo-Pacific, chips away at that influence. Analysts warn that if other nations in Asia follow suit, the US could face a chain reaction eroding dollar demand. Politically, the move is equally sensitive. Trump and his allies have long framed the dollar as a cornerstone of American strength. A high-profile defection by India is a potential talking point for critics who argue that U.S. foreign and economic policy has left openings for China to expand its reach. While officials publicly downplay the risk, privately there's recognition if this trend grows, it could undermine one of America's most powerful tools of influence, not through war or diplomacy, but through a slow, steady shift in the world's balance sheet. The financial markets reacted swiftly to India's announcement. Currency traders saw immediate movement, with the yuan strengthening slightly against the dollar, signaling investor confidence in Beijing's growing financial influence. U.S. Treasury yields edged higher, as fears of reduced foreign demand for American debt rippled through bond markets. In Asia, stock exchanges in Shanghai and Mumbai registered modest gains, with energy and trade-related sectors leading the uptick. Investors viewed the deal as a step toward more stable regional trade flows, especially for commodities. Meanwhile, in Europe, analysts debated whether this was an isolated event or the start of a broader de-dollarization trend. Gold prices also inched up, a classic sign that markets were seeking safe havens in times of uncertainty. While the initial shifts were small, experts warn that if more nations follow India's lead, the cumulative effect could reshape global capital flows and currency hierarchies in the coming decade. If India's currency shift sparks a broader movement, the consequences could be profound. Other emerging economies, especially those balancing trade between the US and China, might see the yuan as a safer, cheaper alternative to the dollar. This would gradually weaken demand for US debt, pushing borrowing costs higher and eroding Washington's fiscal flexibility. For China, every new convert amplifies its economic clout, enabling it to set terms in trade deals and influence global pricing standards. In the worst-case scenario for the U.S., the dollar could lose a significant share of global reserves, limiting America's ability to impose effective sanctions and project economic power. Geopolitically, such a shift would harden alliances and intensify competition between two competing financial systems, one led by Washington, the other by Beijing. The result could be a more fragmented, unstable global economy, where power is measured in currency flows as much as military might. India's decision to trade in yuan instead of dollars marks more than a policy change. It's a turning point in the global economic narrative. For decades, the US dollar's dominance has been a silent pillar of American power, allowing Washington to influence world events without firing a shot. By stepping away, India signals that even close US partners are willing to explore alternatives when it serves their national interest. This move doesn't dismantle the dollar's supremacy overnight, but it plants a seed, one that, if nurtured by other nations, could grow into a new financial order. China, for its part, gains both symbolic and strategic momentum, positioning the yuan as the rising challenger in global trade. In the years ahead, the question won't just be who has the largest economy or military, it will be whose currency commands the world's trust, and that battle has already begun.